The gold rush of 2024. Why prices are skyrocketing. Good evening, and welcome to the Global Markets Report. The story dominating financial headlines worldwide this week, ISN and Oppos. About stocks, crypto, or inflation, at least not directly. It's about gold. It's broken through record after record. We're seeing daily jumps of $40, $50, even $80 an ounce. If you're watching your portfolio or just the news, you're asking one question. Why? Why now? This ISN and Oppos. A simple trend. It and Oppos. A perfect storm. Let and Oppos. Break down the four major forces pushing gold into the stratosphere. Segment 1. The world is nervous. Gold is the ultimate safe haven. First and foremost, global instability. Tensions in the Middle East, the ongoing war in Ukraine, trade disputes. They all have investors running for cover. And when markets get shaky, history shows they run to gold. Think about it. Stocks depend on company profits. Bonds depend on governments repaying debts. Even the mighty US dollar depends on confidence in American policy. But war and chaos shake that confidence. People start asking, will companies still thrive? Will governments prioritize spending over stability? Gold asks for no such promises. It's tangible. It's been valued for millennia. You can and Oppos, print more of it. In uncertain times, that physical, timeless quality is priceless. It's not an investment that earns interest, it's insurance. And right now, the world is taking out a massive insurance policy. Segment 2. De-dollarization. Are nations losing faith? Now, let's dig deeper into that and confidence and issue. For decades, the US dollar has been the world and Oppos' reserve currency. Countries hold US Treasury bonds as their primary savings. But there's a growing unease. We've seen the US use its financial power as a tool, sanctions, freezing assets. And with a potential return of a more unpredictable America first foreign policy on the horizon, other major economies are getting nervous. Countries like China, India, and Russia aren't and Oppos. Just talking about reducing their dependence on the dollar, they're actively doing it. They and Oppos, slowly selling off some of their US Treasury holdings. So, what are they buying with those dollars? Gold. Lots of it. Central banks are buying gold at a historic pace. They're converting paper assets, which can be frozen or devalued by political decisions, into a physical asset no single country controls. It's a strategic move. They're diversifying away from the dollar, and every major purchase by a central bank sends a shockwave through the gold market, pushing prices higher. Segment 3. The Fed and Oppos' pivot. The end of high rates? The third piece of the puzzle is happening right here at home. The Federal Reserve. After the most aggressive interest rate hiking cycle in a generation, the Fed is signaling that cuts are coming. Maybe not tomorrow, but likely this year. This is rocket fuel for gold, for two reasons. First, high interest rates make safe assets like bonds attractive. Why hold gold that pays you nothing when you can get over 5% on a treasury bill? But when those rates fall, that competition fades. Gold becomes more attractive by comparison. Second, lower interest rates typically weaken the US dollar. And since gold is priced in dollars, a weaker dollar makes gold cheaper for buyers in Europe, Asia, and elsewhere. That spikes global demand. So, traders aren't and Oppos. Just buying gold on today and Oppos' news. They and Oppos, rebetting on tomorrow and Oppos' Fed announcement, creating a powerful, self-reinforcing rally. Segment 4. The squeeze. Why some markets see extreme premiums. Finally, there and Oppos' a curious phenomenon explaining why gold in some local markets, like Vietnam or India, is trading at a huge premium. Sometimes hundreds of dollars above the global spot price. The reason? A supply squeeze, but not a natural one. Many of these countries are not major gold producers. They must import it using foreign currency, usually dollars. Their central banks are terrified of a vicious cycle. Citizens use local currency to buy dollars to buy gold, which then gets locked away in home safes. This drains foreign reserves, hurts the local currency, and takes money out of the productive economy. So, governments impose strict import quotas, high taxes, and barriers. The result? Demand is cultural and massive, but legal supply is artificially constrained. It creates an internal market where prices soar far above world levels. It and Oppos. A stark reminder that global price is one thing, but local policy can create an entirely different reality for buyers on the ground. So there you have it. The gold rush of 2024 is being driven by a quartet of powerful factors. Geopolitical fear driving safe haven demand. Strategic de-dollarization by central banks. The looming shift to lower interest rates from the Fed. Severe local supply crunches in key markets. It and Oppos. More than a commodity trend. It and Oppos. A barometer of global anxiety. A shift in the world and Oppos. Financial foundations. And a bet on a changing economic landscape. We and Oppos. Be keeping a close eye on these record levels. For the Global Markets Report, I and Oppos. Kana Sup. Good night.